Ladies and gentlemen, welcome back to the channel. Tesla stock today coming back a little bit, up about 1%. In today's video, we will go over all of your Tesla stock breaking news, what's happening today in markets, and your broader market news today. So do me a quick favor before we get into all of this. Hit the like button, subscribe to the channel, comment down below, let me know your thoughts on this, and check that link out in the description of this video if you want to come join the trading community where we are finding small cap AI stocks before Wall Street does, before Wall Street sees the opportunity. We are getting in early at the ground floor level in high quality companies. That's how you make the most money and lower the risk profile, in my opinion. So check it out if you'd like to come join the action over there, down below in the description of today's episode. But with that said, let's get into today's video. First and foremost, Tesla has urged the Trump administration not to repeal vehicle emission standards or the long-standing U.S. finding that greenhouse gas emissions endanger human health. Tesla said the EPA proposal would give a pass to engine and vehicle manufacturers for all measurement, control, and reporting of GHG emissions for any highway engine and vehicle. Tesla's new delivery center at Giga Texas is now open and delivering cars. So it's pretty cool. You can, come bring your family in, get your car, let the kids play with the mini Cybertrucks on the little track here. Pretty interesting. Yesterday on CNBC, Andrew Ross Sorkin and Joe here were defending Tesla, or at least, asking the Delaware governor here why they changed the laws. Okay. Because of the whole Tesla litigation. And Joe says, I can't see any other legal reason other than Elon makes too much money for a court to try to violate a contract entered into by the CEO. Which he's saying there's no reason why the Delaware courts would not, allow Elon's original compensation package to go through. So, yeah, it's getting a lot of attention still, even at this point. Now, obviously, the governor of Delaware, he said, I can't comment on pending litigation. He tries to defend, Delaware by saying, they did not change the laws because of the case with Elon and Tesla, when they clearly did. Tesla customers who choose a direct delivery at Giga Texas are given a 24-hour access to Tesla's Robotaxi service in Austin. They say, quote, you're welcome to bring up to 2 guests during your rides. Wedbush analyst Dan Ives has raised his Tesla price target to $600, now the highest on Wall Street, from $500. Dan now believes Tesla could hit a $3 trillion market cap by late 2026. He says, quote, an accelerated AI path for the company is now on the horizon, and investors are underestimating the transformation underway at the company. We believe Tesla is taking major steps in advancing its AI revolution path with autonomous and robotics front and center heading into 2026. That will be a game changer and define Tesla's future. We maintain our outperform rating. Musk is now driving Tesla into its next stage of growth as, quote, wartime CEO, and we expect robotaxis to be rolled out aggressively to over 30 U.S. cities within the next year. We estimate the AI and autonomous opportunity is worth at least $1 trillion alone for Tesla, and we fully expect under a Trump White House over the coming year, these key initiatives will now get fast-tracked as the federal regulatory spiderweb that Musk and co. have encountered over the past few years around FSD and autonomous clears significantly under Trump. Trump wants the U.S. to stay ahead of China in this AI arms race, and autonomous is a key factor in who wins AI, with Tesla playing a major role on robotaxis. We expect over the coming months an easing of the federal framework for autonomous, with more power going to federal regulators, with states having less authority on the autonomous rules framework. We believe Tesla could reach a $2 trillion market cap by early 2026 in a bull case scenario, and a $3 trillion market cap by the end of 2026. As full-scale volume production begins on the autonomous and robotics roadmap, the AI valuation will start to get unlocked in the Tesla story, and we believe the march to an AI-driven valuation for Tesla over the next 6 to 9 months has now begun, in our view, with FSD and autonomous penetration of Tesla's installed base, and acceleration of cybercap in the US, representing the golden goose for Musk and co. So what's funny here is a $2 trillion market cap puts the stock at about $640 per share. You have to add another, $340 per share to get to a $3 trillion market cap. So that's really, in Dan Ives' bull case scenario, Tesla stock almost $1,000 per share by the end of next year. $980 per share to be specific. Also in the news today, Deutsche Bank has raised its Tesla price target to $435 per share from $345 per share, while maintaining a buy rating. The price target increase reflects Deutsche Bank's view that Elon Musk's focus on Tesla's Robotaxi and autonomous humanoid robot initiatives, along with his recent compensation package, have removed a large overhang on the stock and will allow Tesla to benefit from its position as a leader in embodied artificial intelligence. Literally, okay, I said this last week when the Bard analyst Ben Callow came out, raised his price target 71%, called Tesla an AI leader. I said all Tesla analysts, like their bosses, called them up and said, hey, did you see that note? Like, review that, give us your thoughts, and let's put something out there. Well, sure as shit, now they're rolling in. Nothing has really happened or changed in the last week or two. But now everyone's starting to talk about Tesla's AI, right? The transition of Wall Street looking at Tesla as a car company is happening, right? They're really starting to look at Tesla as an AI company, and that is unlocking a lot of value for Tesla. Now, we are still in weird September seasonal weakness, of course, technically until Wednesday of next week. We also have the government shutdown, which is going to be an issue, partially today in markets, but over the weekend, Monday and Tuesday, we'll see if we get a last minute deal done. But there is this negative bias in markets for the next couple of days, and that is likely holding Tesla back to some extent today. Okay, once the seasonals get better as we head into October, as the government gets funded, I do believe these price targets, this growing narrative around AI, are going to come back, and Tesla is soon going to be a $500+ stock. We also know that we get delivery numbers on October 2nd that are likely going to be much better than Wall Street is expecting. Ted Meyer on X says production and new vehicle inventories is off the charts at Giga Texas, with a full overflow lot on the east side, in addition to a full and overflowing westbound outbound lot. This is the most vehicles at Giga Texas at the same time than I have observed this year. Here are just a few images to show the activity as we near the end of the quarter, and these lots are absolutely jam-packed. Like, there's not another place to even fit a vehicle here. They are jam-packed. Okay, so a ton of production taking place right now. And in the news today, 224 Tesla Megapacks have been delivered at the Orana BESS site near Wellington, NSW, Australia. The project will install 448 Megapacks in total, providing 415 megawatts of capacity in 4 hours, or 1,660 megawatt hours of storage. Once complete, this will be among the largest storage facilities in New South Wales. Delivery and installation are being managed by Tesla Energy and Consolidated Power Projects, with Acacia Energy noting that progress to date has been smooth and safe. In option activity today in Tesla, I mean, honestly, I can't say I've seen anything like this in a very long time. You have 98 different trades today from hedge funds and institutions, totaling, get this, about $300 million. Here's the kicker: 99% positive order value. That means if you had a $100 bill, $99 of that are going into positive directional positioning for Tesla. That is buying calls or selling puts. only $1 of that $100 bill is going into buying puts or selling calls, directionally bearish trades. Like yesterday, we had $307 million worth of option activity with a positive order value of 70%. So like 99% is a little ridiculous. Like that's like suspicious kind of activity, right? Like, what does somebody know that we don't? When it's that bullish, raises some green flag alarm bells in my mind. So don't be surprised if we get news soon over this weekend or early next week that helps that make some sense. Short interest of free float sitting at 2.98%, $35.46 billion sold short in Tesla. Currently, 83.76 million shares that are sold short as well. And here on the day today, you have short sellers covering about 225,000 shares of Tesla stock. Now, in economic data today, PCE core month over month came in line with expectations at 0.2%. That was the expectation. Last month was revised lower from 0.3% down to 0.2%, so that's also good. Personal income month over month came in a little bit stronger than expected. The expectation was 0.3%. We came in at 0.4%. Personal spending month over month came in at 0.6%. The expectation was 0.5%, and there was no revision there. So you came in better than expected. Inflation came in line with expectations. You could call it better than expected because of the downward revision for last month. So across the board today, you had some pretty good economic data. Now, final numbers for Michigan consumer sentiment came in 55.1, missing expectations for 55.4. 5-year inflation expectations came in at 3.7% versus the expected 3.9%. So that's really good. Consumer expectations came in at 51.7, missing expectations of 51.8. Current conditions came in at 60.4. The expectation was 61.2, so that missed. And 1-year inflation expectations came in at 4.7% versus expectations of 4.8%. So really today, it was better than expected across the board. Yesterday was better than expected economic data across the board as well. Now, we've had a little bit of pressure on markets, to say the least, in the past, 2 days. Okay? You gotta look through that. That's weird September shit going on. When you get strong economic data like this and inflation that technically comes in lower than expected, including last month's revision, that is a positive development, especially as Wall Street has been nervous about the economy, nervous about the consumer. That is a good thing, right? You want to see the economy doing well. You can see today the odds of a rate cut for October are falling a little bit. You were at 90.8% chance of a cut October 29th. You are currently at 88.6%. So you've fallen a little bit today. Maybe that explains some of the weakness, but I think you can really just chalk this up to September seasonals, really. I mean, that's about it. The Dow is up 0.45%, S&P up 0.22%, NASDAQ down 0.11%, Russell 2000 is up 0.40%. Again, look at the VIX. VIX down 2.39% today. That's a pretty clear indicator that today is actually positive. Now for bonds, 10-year treasury yields are unchanged today. So not doing too much there. Oil is up about 2%, likely on that stronger than expected economic data. Gold up about 1% today, and cryptos, some are up, some are down. It's not a uniformly bullish or bearish day for cryptos either. Now, Donald Trump did make some announcements yesterday as well, which are probably having some degree of a negative impact on markets today. Donald Trump announces that the U.S. will impose a 100% tariff on all and any branded or patent pharmaceutical products entering the country from October 1st. He also put tariffs on heavy trucks that are made outside of the U.S. Now, he has said that if you are a company and you commit to building a factory in the US, you will be spared the pardons. So, or spared the tariffs, okay? So, we'll see how many companies announce. And I will just say it has been a while since we've had some big tariff announcements like this. So again, in September, to get these kind of announcements, I'm actually quite pleased with how the markets are doing today, given the size of some of these tariff announcements. Citibank expects that tariffs will increasingly bite. Citibank says we expect global growth to slow below 2% in the second half of 2025. We expect global growth to rebound to 2.5% in 2026. The Atlanta Fed GDP Now tracker is showing Q3 GDP tracking at 3.9% versus 3.3% prior. And we talked about this yesterday, but we were pretty much guaranteed to get a large upward revision to Q3 GDP because of the strong economic data we've gotten over the past 48 hours. Belarus president said this after a meeting with Putin, quote, "There is a good proposal on the table for Ukraine." Belarus president says if Kyiv rejects the proposal, they will lose Ukraine. Moody has said that the odds of a downturn in the next 12 months is 49%. That is actually not true. If you understand how economics work in the 21st century, it's pretty simple. The US economy is so large and diversified. Just think about like if you are a server at a restaurant or you work in a factory or whatnot. Think about the whole supply chain of that, right? You get people coming into the restaurant that are, working different jobs, and they buy food, which benefits the restaurant. They tip you, which you go on to pay your phone bill, your car loan, your house, your blah, 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 blah. All of the trickle down effects from that. You're giving money to phone companies, blah, 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 right? And that's happening with hundreds of millions of people. The economy is too diversified to just slow down so much to cause massive layoffs and go into a recession. We have not had just a recession without a catalyst in 100 years-ish. It doesn't happen. We're too diversified. The economy is too large. It's not, so dependent on one industry like some countries are. Like, I've had people ask, like, why do we not have a sovereign wealth fund and Saudi does? The Saudis do. Well, because their only industry is oil, right? Really. So if oil goes through a hard time, the whole country goes through a hard time. They have to have a sovereign wealth fund. They're not diversified. We are diversified. The economy does not just flip one day. You need a catalyst. You need a shock event. The whole tariff trade situation was a shock event back in April with the, China situation. That was a true shock event. That was a black swan. Nobody's seen April 2nd coming. Okay. But it's since resolved enough to the point where it's no longer a shock event. If we were to regress on trade with China, if we were to go back to April 2nd style, situations, that would become a major problem. That would become a recession catalyst. And I'm on the lookout for that. I don't think we can absorb another trade embargo with China and just walk away from it scot-free again. But unless something like that happens, a major company goes bankrupt, something big happens, we're not going to go into a recession. That's the simple fact. The question really is, how much do we weaken? How many rate cuts do we get? Where is inflation? And really the combination of these is what's important at this point. Trump says if the US government has to shut down, it will shut down. This is also something that's making investors a little nervous because, again, we have today, we have this weekend, We have Monday of Tuesday of next week to get a deal done. Tuesday at midnight, if there is not a deal to fund the government will shut down. Now, I don't think this is enough of a shock catalyst to cause a recession. But that doesn't mean Wall Street won't be nervous about that. Okay. Now, it's good the last 2 days we've had really solid economic data. Okay. That should keep some of the recession fears at bay, maybe a little bit. But I can see why this is causing some bit of nervousness. Now, if the historical track record of the government kind of pans out again with government shutdowns, we're going to avoid a government shutdown. There's going to be a last minute deal done. But I do want to point out the longest government shutdown in history was about 45 days. And it happened during Trump's first term. So when he says, like, if the government has to shut down, it will shut down. Like, I think he's serious. China's Premier Li says the world is entering a new period of turbulence and change, with unilateralism and Cold War mentality making a comeback. Trump says the economy is doing well and prices are down. Kremlin says calls for shooting down Russian jets amount to a serious spike of escalation near Russian borders. And here is a image of the states and the contribution to GDP weighted to these states. The ones in red and orange are, well, deep red is clearly in a recession. Jersey, Virginia, Georgia, Massachusetts, Rhode Island, Seattle, okay? Minnesota, Mississippi, Michigan, West Virginia, New Mexico, Colorado, Nevada, Montana, all not in a great situation. Iowa, not in a great situation here. The only states that look like they're doing quite well: Texas, New York, North Carolina, Florida, California. Very interesting chart here. Trump says the economic numbers are great. And Trump says it looks like we'll have a Gaza deal. Fed Barkin says, I see the monthly break-even jobs rate now in the 0 to 50,000 range. Economists lift U.S. growth outlook. Bloomberg's latest survey sees U.S. GDP rising 1.6% in Q3 2025, up from 1.1%, with full-year growth revised to 1.7%. Inflation expectations held at 2.8%. Revised data showed Q2 growth at 3.8%, the strongest since 2023, though economists warn tariffs and policy risks could slow momentum. The Fed's rate is still seen dropping to 3.25% by the end of 2026. From 4.25% now. So about 4 rate cuts. BMO has lifted their S&P 500 target to 7,000. BMO Capital raised its year-end S&P 500 target to 7,000, aligning with its earlier bull case scenario. The bank said the move reflects the market's rally, resilience, and its long-term view of a 25-year secular bull market. BMO credited its investment discipline for strong 2025 performance, including its best quarter in over 20 years. Analysts cautioned, however, that markets are rarely linear and expects a possible blow-off top before stabilizing near 7,000. So what does a blow-off top mean? That means a very large rally above 7,000 and then coming back down to 7,000. Still, they see supportive conditions ahead with Fed rate cuts, stronger earnings, broader participation, and no signs of an AI bubble. BMO suggested 2025 could resemble the Goldilocks environment of 1995 through 1996, which I agree with that. Like, if we are going to get an AI bubble, I think it's maybe a 2027, 2028, 2029, 2030 kind of thing. We're still some years away from that. Fed Barkin says unemployment looks a little shakier, but inflation is better. Fed Barkin says there is reason to think there is limited risk of both a big rise in unemployment or a big rise in inflation. So she says that things are about perfect. She's not expecting any problem in either direction, or at least says there's reason to think that. With that said, ladies and gentlemen, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. Check out that link down below in the description of this video if you want to come join the trading community. Have a great rest of your day, and I will see you in the next one.